And we're recording, so yay. Okay guys, we're going to be looking over charts, and we'll take a quick look at 2.7. When you get 2.7, it's going to be two different things. You're going to get two templates. 2.7 is your normal template for London and the United States session. The second template will be called 2.7a. That'll be your template for Asia. There's going to be two differences, only one major difference in it, and that's the value charts that we'll be using. Let's see. Anything other than that? No. So let me close this down real quick, and we'll come back to that in a little bit. So let's take a look at charts first, since nobody had a preference. Let me find the charts, and blah. Where the hell are they? Jorma, there we go. We have from looks like the 27th and 28th of April, which we know this week's been kind of funky. A little word of advice: if you watch like Game of Thrones and they say the long winter's coming, well, the long summer's about to hit. So be prepared. Summer trading is shitty and hard on a smaller time frame. Even on a higher time frame, it is challenging. Reason being is the banks and everything, the money makers, banks, hedge funds, things like that, go on vacation. So we see a definite drop in liquidity, and we see more random spikes on the market. Okay, let's get these going. First one's going to be... It's recording. Someone said record it in Skype. Okay, so our first one we're looking at... Well, anyway, let me finish up on my summer spiel. Don't worry about summer... worry about summer trading. Don't get pissed off if things start to not work. Summer trading is a little bit brutal. Just lay back, wait for good market conditions is all I can say. Other than that, I will be pushing up to a higher time frame and focusing on Forex for the summer. If that's something you're interested in, hit me up on Skype, and I can help you out a lot, or not a lot. I can help you out with getting going on it. Same thing though. Actually, I'll probably just do a webinar next week on Forex, if we're prepared. Last year, summer, I was expecting to hit in June, and it hit like the second week of May. We're in May now, so start being prepared to see bad. No one knows when it's going to hit, but be prepared. First trade we got. Let's see if this is going to work. There we go. Okay, so if we look, confluence-wise, I'm guessing the yellow was a trap, and the green line is his buy. He's using core liquidity market, so he's trading directly from. It was core qualified. Stock was heading pretty well. No confirm. Institution-wise, we had two. I'm guessing since there's no FIBO on it, this was top of... Well, it wasn't top of hour. Might have been 11:40. I don't know. Screw it. You might not be using it. But anyway, this one's a nice trade. If we notice, it's not ranging perfect. We up, down, it's up, down, up, down. So what do we have? We have somewhat of a stair-stepping, and then it kind of went into a small range here. But still, we had two institutional levels. Current market conditions almost hit the Bollinger Bands. It was overbought, oversold. So all in all, not a bad trade. Remember, the person that's sending me these sends me a before and after shot. Any comments on this trade? Anyone that would not have taken it? Anyone that would have taken it? Before I bring up the results of this trade. Any predictions on if this was a good or bad trade? You can type it in chat. You can say it on your mic if you want, even though I muted everyone. You can unmute yourself. Alright, no, let's take a look. Oh shit. This is not going to be the right chart. Fucker. Here, let me move this little bar out of the way too. This is the stupid recording bar. Let me find the trade. Let's say USD, JPY. I'm trying to make sure I got the right one this time. I got a new mouse and I keep clicking the wheel so it keeps scrolling. That was the result of it. I don't know. That was a freaking outstanding result, but I don't know if there was something that hit during that, because that is quite a freaking reversal. But technically wise, very good trade. He had two institutional levels. Current market conditions also matched. Previous swing low was right here, and it held. And it also held here. Price did not drop below this swing low. It just hit it and paused. So reversal, in my opinion, pretty good. That's just a crazy reversal, though. The center of gravity, just keeping in mind on it, wasn't bent out of shape. Remember to keep an eye on the center of gravity if you're new and you're still using it. If the center of gravity is bent out of shape, like if it looks like somebody's put a hand on it and squeezing the shit out of it, that means that it's not there's a fucking fly in here. That means it's not the algorithms that run it, the formula that runs this center of gravity isn't able to keep up with the market if it's bent out of shape. So just keep an eye on that. Other than that, I mean, pretty much perfect setup. I probably would have gone a 3% on that. Maybe 3%, because I don't know where this was a top of the hour trade, because there is our FIBOs. This is the hourly FIBO, so this was a top of the hour trade. That would have given me 3% right there. Any questions on that chart before we move to the next one? Alrighty. Let's see, our next one is going to be... Oh, there's the later shot of what it did after that. I like how you do these with before, after, and later. So it spiked up, then dropped right back down. But it was a continually uptrend. The one thing you do want to notice, and this is going to be in 2.7, what do we have here? A slight uptrend. So he was taking a trade that was going with the trend. Now if he would have taken a call, that would have been against the trend. That's something I'm going to focus on with 2.7, and you'll see it there. But other than that, I mean, excellent trade. Let's go to the next system. This is PA M1. Some of these are not going to be TA, but like I said, I go over any charts y'all send me. That way we can help you out. Right away I can say these candles are too small for me. I know you have 1, 2 institutional. We have a weekly high. The daily high, of course, is there also. And we have a 161 on the current market conditions, touching the Bollinger Bands. Remember to keep in mind, you're using the dot so the spread isn't there, but when your candlestick sizes are that small, remember that the binary options broker uses bid plus ask divided by 2 for pricing. So if you have tiny candles like this, and the spread on average is they're using a 1 or 2 pip spread, if it's a 2 pip spread, they can fudge price one whole pip. Does anyone else not have sound? Okay, so we're gonna keep going. So remember, with these tiny ass little candlesticks, you're going into a danger zone there, because the spread and the amount of room that the broker can fudge price, it's just comparatively larger than your candlestick size almost. So don't know results on this one yet, but I would say I would have passed on this one just on candlestick size alone, because my candlestick size wasn't bigger than the spread of the market. So let's see what the result was. AJ, I got the right one this time. It did drop nicely, though. Is it the same with CLM? You know, honestly, I don't know. I honestly don't know. Between you and Norman's, well, he can't hear, so... anyone else using CLM, you'd have to let me know, because when you hit buy or sell, is it giving you the exact spot on the chart, or does it adjust it a little bit? Okay, then don't worry about it. If you think you can get a perfect entry, then go with it, roll with it. If you're not using CLM, I hate you fuckers too. Just let's get that out there then. Because I got to deal with the spread, and so does everyone else in the U.S. I'm going to move into Canada. Okay, so Okay, so for COM, I guess disregard that if you think it's going to go down. I mean, it's still a good idea that you want a little bit of candle movement with some volume. Now, if we're going to trade tiny candles with no volume, then you're definitely asking for trouble. But if you have volume and small candles, it's a little riskier, but do it. Did you say something, Alistair? Okay, results on that one really good. And let's see what the later was on this one. I guess that was it there. Yeah, the low volume and small candles are a nightmare because you can see a huge spike in just a weird direction because it's easier for a market maker to drop. Let's say it takes, I'm just going to use random numbers here. It takes $1 billion to move price 2 pips. When we have low volume, they could drop 1 million on the market and move it 3 pips. So that's why low volume is dangerous. And there are some institutions, hedge funds, banks, they will wait for volume to be extremely low and then drop something on the market just so they can spike price up really quick. And then the algo computers, the black box computers will respond to it immediately, but it's a way for them to move price instantly. And remember, the only reason they move price is they might be doing a transfer from, let's say you're looking at AUD JPY. So maybe there's someone in Australia that needs to move money over to Japan, so they drop the price on the market and then transfer the funds. Pretty simple. Alright, so next. This is This is a TA trade, USD CHF. Remember, if you're trading USD CHF, it does move faster. It's just like the AUD NZD pairs. Any CHF and NZD pairs are fast movers. If you're a beginning trader, avoid them. Get used to them first. Demo trade them for a bit. They are definitely fast movers. Okay, on this one, didn't quite hit it, but we have a nice area here. And remember, your areas are like magnets. We have an area here, prices here, it's almost hitting. If it shows that it's slowing down before it comes into an area like this, personally, if it goes overbought, oversold, stock, can you remind me of how to check volume and what to look for? Yeah, well, let me finish with this one, and then when I bring up, just remind me of that once I bring up MT4, okay? So, what do they say in that movie with Bolt? Put a pin in that. um, cool. There we go. Volume's down here also. He has volume here because he is using it. Okay, so this one, 1, 2, 3 institutional levels. The current FIBO's not there. Might not use it. Here's our hourly. It breached through this and this, so it means this and this is your 100 levels for your hourly FIBO. I keep forgetting we have some new people. This is your hourly FIBOs. So again, they redraw at the beginning of each hour. Breach through. Since the current FIBO swing isn't on there, I can't compare whether the market's expanding or contracting, but typically I'd look and see. But it was showing definite here. If we go back and look right here, we had a swing high, swing low, because it had already breached here and kept going before it was. Now, overbought, oversold. Here's our swing high, swing low. Closed slightly above it. I mean, for me, 3% trade, just because I saw it flatten out and we have 1, 2, 3 institutional, current market conditions, overbought, oversold, stock is maxed, and we have a confirm down at the bottom. So, again, not a bad trade. Anyone have any comments? Anyone would have skipped this one before we bring up the result? Bad, good, anything to say about it? Mosquito got my neck. Against trend, yes. Again, against trend isn't a bad thing if it has a brick wall to run into. Um, like I said before, it wasn't politically correct, but if the wall's strong enough, it's like a retard running into it and bouncing off, so. We have ranging. We have a slight upward trend. Um, again, with 2.7, we took care of that. I'm going to be showing you that in a second. You'll have you'll have current trend and overall trend on your charts. Okay, let's take a look at the result. Let me close this one. Here's the result of it. Looks like you took an instant 5-minute down, because it. So he's using core, so he doesn't have to actually wait till like Markets World with the U.S. traders, where we're kind of stuck with the shitty entry system. Overall, I mean, that was a good trade. He waited for the current market conditions, even though they didn't line up perfectly with the institutional. And remember, the institutional are going to be everything that's over here. So, in my opinion, not too bad. It was ranging. We have up, down, up, down, up, down, and then up, and then down. And this up happened to match with this previous swing high. So, overall, not a bad trade at all. Did you send me any losers, man? What the hell? I know that's bad for you, but... Okay, the next one we have, this is Euro JPY. Cool. Daily pivot on this one. We have the current FIBO, but we don't have the hourly FIBO, so this is one's top of the hour, I'm guessing. Alright, so we have daily pivot, which, again, your daily pivot's going to be one of your stronger. Your pivot points, your daily and weekly, your best ones. And when I say daily pivot, the ones without numbers on them. Anything with a number on it, and this doesn't pertain to your Murray math lines here. This pertains to your pivot points. A daily pivot or a weekly pivot or a monthly pivot with no numbers on it's going to be your strongest bricks in your wall, if you want to word it that way. Once it has a number on it, the higher the number, the weaker it is, so keep that in mind. So this one, daily pivot, value charts, overbought, Bollinger Band was hit. As for support and resist, can anyone see the support and resist area? It's not that clear, but there is one there. The hourly candles kind of give you a hint. What I'd be looking at is right here, around this area. And we're showing that it is kind of being respected by the movement right through this area here. Going up it wasn't, and down it wasn't too much, but with the hourly it's kind of holding. We have a peak here, and a peak up here that dropped. As for trend, do we see a trend here, or is this just perfectly ranging? Well, not perfectly, but... This is the type of chart you could just go ape shit on, pretty much, except for wicks. We have a nice range. It started off... Okay, so any guesses, win or loss on this one? We had a verbal response. Alright. Let's take a look. Looks like it just held... These are the ones that piss me off, because if you get shitty entry on them, you lose. But, it kind of dojied out. Don't worry. Remember, guys, when you're trading, okay, you're shooting to get above 60%. You're shooting to get above 60%. What you can, and to be quite honest, about 80% for, I would say, is going to be your max. Why? 20% of the time, the market's going to wipe you out. It's just the random part of it. So, if you can get above 60%, up to 80%, anywhere in that window is good. Even if you're riding at 63, 64%, you're still good, especially if you're getting one of these brokers who's doing damn near 80% payouts. I'm stuck with Markets World at 70%, so I have to be around 65% to be in a decent profit, but without me just grinding to a halt, where I'm still making money, but it's so damn slow that I just want to pull my hair out. But remember, every trade isn't going to be perfect, and honestly, I would say 15 to 20% of the time, the market's randomness is just going to wipe out even a perfect trade. So don't get pissed off if you have a perfect setup that doesn't work. Let's look at the later on this one. Overall, that one wasn't a bad trade. I mean, a daily pivot's a very good level. You can see that it kind of held out, and then right here, kind of held out, then dropped. It did have an ABC pattern forming. That's not here or there, though. Let's ignore that I said that. It did drop, so overall he got the gist of it right, and then it went back up. Let's skip this one now. Next one. Any questions on that chart? And we'll take a look at the next one. Next one's another USD CHF. Okay, looking at it, we got 1, 2 institutionals, 3 actually. Okay, yellow and pink. What are the differences those on round numbers? Let's see if anyone was paying attention last time. Yellow is stronger. Yellow is our big round number. Pink is our small round number. So yellow, in most cases, is going to be our stronger. Not necessarily all the time, but yellow is what people, when they type in this into chat and you see BRN, that means big round number, small round number. So we had a small round number, which is an institutional. We had daily FIBO 61.8. Daily FIBO, now on daily FIBOs, what are the levels I focus in on? I like 100, 61.8, 161.8. 127.2 would be about the equivalent of a small round number for me. So remember 127, it's right there, you'll see it. It's about a small round number for me on how heavily I weigh it in. This was a... Okay, so ranging, trending. First thing we should look at, we are ranging. Second, trend's kind of flat, so again, we're ranging. If we look, though, down here at value charts, this was the expansion right here. Say all value charts went apeshit. And then we come into where overbought, oversold is being respected very well because we moved into a range. So trading this one, again, this is like a monkey could trade this shit. When we have a pure ranging market and a flat trend, like there is no trend, that's when TA becomes just easy to trade. I mean, you could just literally just trade it blindfolded almost. Any predictions on this one? ITM, OTM? Anyone see a problem with this trade, or is it a good trade? Increased candle size, BB opening up. Yes, we do have that. So let's look, BB's opening up and increase the candle size. Let's look back here. We have a previous swing high here that was blown. It didn't pull back. Previous swing high, here's our next one, and here's our third one. So this is where it gets kind of tricky, and it's going to take time. This is almost a 5% trade. This here and this here, the candle, all of it, the candle closing below all of these swing highs for me would drop me down to 3%. We have the daily open line right here. So we actually have 1, 2, 3, 4 institutionals, stocks kind of low, value charts, and confirm. So we have a shit ton of confluence, plus we have Bollinger Bands. They are opening up a little bit, but we had a tight range. So, okay, let's do trade size. 3% or 5% trade. Knowing that we have 1, 2, 3, 4 institutional levels, current market conditions, we have 3, I'd say 3.5. So we have about 7 or 8 reasons for this trade. 3%, I agree with that one. 5%, if that candle wouldn't have been so big, I probably would have said 5%. This is kind of where it is. If we look at hourly, does the hourly give us any hints of what's going on? And when I say hourly, look at the hourly support and resist right across here. So it closed below the hourly. Now, here's the one thing you want to take a look at. What about momentum? How much momentum? We're in a range, so we're not in a trend. How much momentum do you think this thing has to just continue plowing down? Think of it as an itchy chart for y'all that use itchy. The cloud would be going red, green, red, green. So do we have a shit ton of momentum that's going to carry this price downwards? So we don't. And personally, I mean, like I said, you might get spiked out here, you might not. I haven't seen what his result is yet. But for me, this would be a good trade even with the larger candle because we don't have momentum. Now, if we had a trending chart and the green cloud was just heavy down this way and this setup occurred, that then is the perfect setup for a run. Even a temporary run. If we had a trend going downwards, this candle to me then would indicate that the next candle is going to go down because we broke all these swing lows. And then there's this one. But since we're ranging and we have no momentum, this would be a good trade for me. We'll take a look at the results and see what happened. What about the touching of the VC? It's double tapping here, but it's going medium over, and then it's going medium over, but it's responding well if we look for the most part. Even though it looks like we're getting double tapping, it's reversing on them. So by the history here, once it went into a range, yeah, we're getting two touches, well, two and like 1.5, because we're getting a 7 point something and then an 8, but they're reversing nicely on all of them. This one again, we get a doji out of it. Personally, if I had to guess, I'd say because yes, they probably did want to run it, but they didn't have the momentum to force it down. It didn't make sense. You would have had to wait till the last second to get into that one if you would have jumped the gun on this one again. That's why. Let's cover entry real quick since we're on this one. Entry, if you're new, hold off to the last 10 to 30 seconds. The longer you can delay entry and the candle is still qualified for a trade, the better. Once you get better, like for me personally, my entry would have been the daily open. I would have taken it when it hit there. Now, if we would have been on a trending market and I was going with the trend, I would have waited to the last couple seconds. But since we're on a range, lack of momentum, I would ignore. Okay, so Jorma did exactly what I did, because we had 1, 2, 3, 4, 5 institutionals. So I would have shot here because this is the lowest point below all of them. Now, if you're new, again, wait till the last 10 seconds if you can, and then get your entry. If you understand what's going on here, that we have no momentum, it's flat, it's a super nice range, and you have 1, 2, 3, 4, 5 reasons, pick the lowest reason and snag that entry when it hits it. Any questions there on entry and why I would, in this case, ignore my entry rule? And then hopefully we'll see one where we do follow the entry rule. Hopefully not. So, really good trade. It's on the roof there, man. I would have to see this one. This was either a 3 or 5% trade. I would have to be seeing how that candle moved. If it was here and then it shot down all of a sudden to there, it would have been a 3. If it nicely moved down and just hovered there and then pulled back up, would have been a 5% for me. But either way, my ass would have been in on that daily line because that put me below all of the institutional levels. And let's see, the later on that one. Continued down. That was kind of a brutalish one. It looks like they were trying to push price down. Remember when you get a lot of levels like these two? This is going to get into a little bit of a forex, but what happens is there's levels here. They will push it a little bit lower to clear out people, basically to stop loss them out. So if people hit a buy here and they're moving upwards because they think price is going to move upwards, market makers, they will just, it's like clearing out the trash. They'll push it lower, clear out some stops, and then they'll let it go back up. So that's going into Forex. We'll talk about that next week. Again, though, if y'all have questions on Forex, more than willing to chat about it. Next, we're moving into the 28th of April. USD JPY. Okay, so Ranger trend. We're gonna. I think that's how we'll start it. Okay, so first one, it's a range overall. So short term, we have a range. Let's look at long term. Do we have a range or trend long term? So we have short term, long term matching range. And when I say long term, this is good enough for long term. The next thing we're going to look at is candles. It's moving up and down, not the prettiest candle to enter on. Range all day. This one I would have to say I probably wouldn't have taken. What was your reasons for it? BRN, SR zone, past fib chart, M1. Okay, so he was using the M1 chart on this one a little bit too. For me, okay, just for the standard guys, here, let's take a look first thing. A couple things I can see. For the newer people, would not have taken this one because we couldn't build enough confluence. We have a round number, which is 1. So we'd want one more institution. Let's see if I'm missing something. We pick up one more. Support and resist is here, and if we move back, nothing else. So here's our previous swing low. Round numbers right there. So it's a big round number because it's yellow. What we do have is the current market conditions. Here's our current FIBO. So it's 0 to 100. You can barely see it, but right there, And right there, those little box, that's our hourly FIBOs for the last hour. So is the market contracting, expanding, or is it holding steady? If you compare the size of this to the size of this, it's holding steady. So good. So which of the hourly FIBO lines would we be focusing on to look for support and resistance, the outer or the inner? There we go. Since the market's holding in size, the inner ones are what we'd focus on. If this right here was bigger than here, let's say it was like that, then we would ignore the inner and we would wait for price to hit the outer. But in this case, he did it perfect. He waited for it to hit here, so we had a round number, hourly FIBO, 161.8 almost. Value charts wasn't quite there. This definitely looks more like a, I would say a price, not price action. This is just a normal market conditions trade for me. It's something that I might possibly take if I had actually watched it. Not really a TA trade, but it's all in all not a bad trade. Any comments on it? Would anyone have taken it, passed on it, 1.35%? Good. That's about what I would have done on it too. I would have had to have. I wouldn't have had a trap set here. The only thing that I would be lacking is I would be looking for this round number. I'd be looking for something over here to line up also. Let's take a look at the results on it. I'm not saying this is a bad trade. I'm just saying for the TA guys, this is one you would pass on. Oops, I got to the wrong chart again, son of a bitch. What are we? USD JPY. Yeah, I'm an idiot today. Well, that's normal. Okay, so that's the result off it. Again, you're doing really well, man. I mean, that's one that personally I would have been iffy on. So that's actually a pretty good trade. Not too many comments on it. TA-wise, guys, not a TA trade, but because we're not core qualified. But as just a looking at the charts and observing what's going on, that is a pretty good trade. Let's go on to the next. This is a SR zone trade, NZD USD, which used to be one of my favorite pairs. Again, this is one of the faster moving pairs. If you're new, trading NZD USD can be brutal. It can really just kick your ass. This is a support and resist trade. It's not a TA trade. So everyone can see where the support and resist is on this, right? If not, I can draw it on there. Look at our hourly candles. We have 1, 2, 3. They're all right about in this area. So this level here is just holding over and over and over. Yep, previous monthly's high is there. Weekly, daily got pushed up by this candle and rejected, and then price just keeps trying to get back up there. This isn't a TA trade, but does looking at it, I'm trying to actually look at it. 1, 2, 3, 4. A little scary, yeah. What I like to see on these is this would have been a bounce 1, this would have been bounce 2, and this would have been this could have been bounce 3 or this could have been bounce 3. But remember on the levels, it's just like you're hitting on a wall. The more you hit the wall, the weaker it gets, because you're clearing orders out. This one cleared an order out, price dropped. Price came back up, spiked up to here, cleared out some more orders, price dropped, came up again, cleared orders, price dropped, and again, and I don't know what happened. The setup is sound. So whatever happened on it, I would say as a support and resist trade, I would have started here at either at like 3%, and probably where you're at, I would have dropped down to 1%. Let's see what the result was on it. You can't tell. Oh wait, it's marked OTM, so I'm guessing it went OTM. You probably entered at the same can. I don't know. Let me look at the other chart. I'm lost now. Exact same two charts, so I guess maybe 3165. Yeah, it's the exact same chart. Let's look at the later. Okay, so here was the trade, and then it decided to go up and broke. Again, I'm not gonna say good or bad trade here. This isn't a TA trade. It is a support and resist trade. For me, like I said, this is the first hit where we should see it. Second hit was here because we have the levels here. So we could have possibly gone in here. And this was, honestly, this was third, this was fourth hit. I will take it second hit if you can identify it. Third hit up pass. It's like a 4x thing where they say it's the rule of threes. You never want to jump in on the third because that's your weakest and that's your highest statistically potential for a run. So don't feel bad. I mean, you identified a good support and resist area. You're going to win some, lose some. I mean, don't get pissed off about those. And it's nice you're trying something other than TA. Next one. Any questions on that one while I bring up the next one? That was not a TA trade, it was a support and resist trade, so if you're not clear on it, don't worry about it. Just wipe it out of your brain. Next is GBP, JPY. This is not a TA trade also. It is basically another support and resist, but this time we have a little bit of confluence on it. We got a Murray math line. Our 0 to 100, it's a little bit hard to see. We have market conditions not expanding. They're holding steady, so the current market conditions versus our hourly FIBO, we're holding steady. Yeah, it's the same like before. This one's, shit. You're right. I was looking at this one over on my other screen, sorry. I didn't realize I had the wrong one up. Okay. This one right away, see the small candles? I'm out. Right there, I'm out. I'm not touching this chart. The wicks to me don't matter. I'm looking at candle body sizes. I'm out, not touching this one. You do have a shit ton of confluence though, but because of the wicks and the candle sizes, it kind of screws up how I see it. I like to see a body of a candle hitting these and doing something. A lot of people say, oh, we get like a freaking hammer or a morning star. If you don't know chart patterns or candlestick patterns, don't worry about it. I see small candles, so I'm out there. Let's look at levels though. We do have a round number. We have weekly resist 1, Murray math line. This is the little PRP indicator. That's part of the FIBOs. It's in the middle of everything also is what I would see here. Here's our hourly FIBO, middle. Bollinger Band's middle. It's in the bottom portion of the cog, yes. Value charts, it's not overbought, oversold. Stochastics, it is. For me, this shows out of sync. I would just pass on this one. We'll see what you got out of it, but for me, this is a definite pass. Even with the confluence, it's a pass because nothing's syncing up. Our institutional aren't matching up with our current market conditions at all. And we're riding the no man's land in the middle of our hourly FIBOs and the Bollinger Band. Results, let's see, I got the right one. And results, of course, you got one that spikes up, so I can't say much there. I mean, for you, great trade. We did have the confluence there. For me, I would have passed. But, I mean, awesome trade for you. Oh, it was an M15. Didn't even notice that. That would still scare me, though, the little candles. Actually, on a 15-minute, I mean, yeah, that would help a little bit because then the candles have longer to develop. And, I mean, your entry was damn near at the bottom, so on a 15, I mean, it's nice that I like how you're changing up your time frames. I do that too. I will switch between 5 and 15 sometimes, or on a 5, I'll take a 15-20 minute trade if I'm not sure. If I know price is going to drag ass like this, but I want to give it time, sometimes I'll take a 15, 20, 30 minute trade the opposite direction. I've posted a couple of those over on bo.net where I'm just like, fuck, I know what it's going to do. It's going to push a little bit, and you get to the point where you're going to hit like 1 or 2 pipette losses. So you can extend it out and take a longer one. It's a good way to look at it. As long as you know. Okay, so what's the one thing, since we're looking at this, he took an M15. What did he have going for him with this trade? There's one thing that stands out that by taking a 15-minute trade, he had something going for him. There we go, the trend. What the hell am I doing? The trend was up like this. So even if you got entry wrong by extending out the expiry time, it lets the trend work for you. Will that work all the time? No, but going with the trend can't hurt. I mean, it definitely cannot hurt. It's just going to help you out. Next. Oh, that was it for those. I think I might have a couple more. Okay, I got some OTMs that we're going to take a look at. These, and thank you, Jorma, for yours. Do we have any questions over those so far? I got some other ones we're going to take a look at real quick. And then we'll get into the other one. This is the first one. This was, we can see it right away, OTM trade. Cool. By the way, nice charts. I mean, I'm loving how you do the before, medium, and then after. It makes it kind of cool for when we're doing the chart reviews. Like where this one, and no offense to whoever's these are, that you can see it right away, because this one, everyone can see the results right away, and I like yours because it lets people actually think about the charts, and I can get feedback. Looking at this chart, would anyone have taken this? We already know that it's a loss, but would anyone at all have taken this, and can you tell me why not, or why? Okay, not core qualified. What about these candles? What are they? Okay, tiny candles, not core qualified. Even if it was core qualified, no value charts. When you see crap flat like this, to stay out. We're looking for movements more like this. And then markets went flat. Tiny candles, flat market, not core qualified. Just because stochastics is down as the bottom doesn't tell us anything. Yes, we have two reasons here. Confluence-wise, this is where it comes into. We have confluence, but we don't have the market, an appropriate market. Here's our institutional. So we have two institutional levels that it's beating against. Let's look at if I draw the line. There's our institutional, where I'd say they're kicking in. Price is going against it. He's going against the trend, yes. First thing, before anything, just the candle sizes, the way the candles look on this are pure dog shit. Don't trade it if the candles look like this. Second, what we have is, we have institutional levels. Where are our current market conditions? It's in the middle of the Bollinger Band, middle of the COG, and VC's nowhere to be seen. So we have a conflict between institutional and current market conditions. Stay out. Simple as that on that one. We don't even have to get into anything else about trend. Going against trend, yes. Personally, just no, stay out. I mean, everything about this one is horrible. The candles are horrible. We're riding the middle on everything. Value charts, Bollinger Band, even though it's down the bottom of it, it's still not anywhere near touching it. Center of gravity, it's not doing it. Just everything on it wrong. Let's look for core qualified first, and then we can judge the charts. So this one shouldn't even be entered into because we did not have value charts in core qualified. Let's go back. Let's see. Next one we're going to look at. And again, it's good to look at the bad ones. I already brought that one up. AUD, JPY. Okay, so we're looking a little better on this one. We have got, first thing we're going to look at. Now remember this here, current trending. This indicator is not perfect, and I'm going to show you all that again later. Okay, so market trend or range, short term. Range, good. So we have a ranging market. Price is moving up, down, up, down, up. Next thing, levels institutional-wise, we have, well, core qualified, yes. COG, value charts. So now we have a setup. Yeah, the exact entry would be nice, but some of us don't have core liquidity markets, you lucky bastards. Institutional-wise, what do we got? 1, 2, 3. No round numbers in sight. if we look at our 0 to 100, which is from here to here, and here to here. So here's our current, and here's our 1 hour. Market's expanding or retracting, or is it holding steady? Okay, so we have an expanding market, so we're going to be ignoring this level and this level, correct? And we're going to be looking at this level. So this one, and I know I just tore your ass up on that first trade because it was, and I'm not going to be nice about it, it was pure dog shit. This one is a much better setup. The first one was dog shit. This one is much better. 1%, 3%, 5% on this one. Current market conditions, what do we have? We have confirm, we have value charts, stochastics is maxed. Institutional wise, we had 3. So we had 3 institutional. Let's just count the numbers and see. We had 3 institutional. Here's our current market conditions. It blew through it didn't blow through 161, so it hit 161 and moved upwards. So we'll count that as 1 current market condition, 2 current market conditions right here, Bollinger Bands, 3 market conditions, 4, 5, 6. I haven't even got there yet. So we have 6 current market conditions, 3 institutional market conditions, and support and resist wise we have, let me get back into the drawing. We can see an area here. Look, price stops and bottoms out here. So that's a support. Support then becomes a resist. Sorry, I'm trying to draw it underneath it so you can still see the candle. So we have a support and resist there. So yes, decent trade. If you had time to take all of that in, 1 to 3%, definitely. I would not have gone 5% on that one. 5% for me is a rare thing. I mean, honestly. I just have to like everything lining up on a 5%. This was borderline. I don't know. I'd have to see it on my new setup. But 3% would be a decent number for that one. And it barely came in. Remember, guys, even with all of that coming in, that's still, we didn't get that much of a push down. Overall, the trend, you probably can't see it, but he did overall with, I guess you could say, the longer term trend. Can anyone see what it is just from this? Is it up or down? It looks like we're flat, but overall, if you had to guess, what would you say the overall trend on this one was? I would say if we had to look at it, that's the overall trend. Slightly down. So that was a very good trade. Much better than that first one we looked at that made me want to vomit. Let's take a look at the next one. Let's go to cable. That one did come down to entry, though. You would have had to wait it to the end. So that one, like I said, entry, waiting to the last second. Now, if I was breaking my own rules, we have 1, 2, 3 institutional levels that it's pushing through. You little son of a bitch, quit jumping around. Okay, if you're following the rules and you're waiting to the last 10 to 30 seconds, entry there would have taken care of itself for the trade. If not, where would your entry point have been? What would you have been looking for an entry on that if you weren't going to wait till the last 10 seconds? Because you didn't want to get a pullback and miss out on the trade. If you had to pick a number on the chart. Always go with your highest of the 3. So, on this case, it'd be the daily 5061.8. You've got a little, think of it as a magnet. So we know that there's a wall here. The BBs, though, remember, using a Bollinger Band to get entry is going to be difficult because the Bollinger Band's going to be moving with price as it moves. So pick a static level and use that to base your entry off of. Because the Bollinger Band's going to be moving around a little bit with price. So that's going to make it difficult to judge entry. So pick a static level, like the 61.8. We have 3. Pick your entry as up here. If you can't get it, then just wait to the end of the candle. So if price is bouncing around so fast that it keeps getting up here, but you can't get your For you CLM bastards, you don't got to worry about it. Get price above here, enter. For the rest of us in the real world, in the United States, whatever you want to call it, we'd have to wait until Markets World or our broker gave us a price above like 92.825. Then we would want entry. Or just sit on your ass and wait till the last 10 seconds and hope your broker reflects that price as it closes. So, two things there. Wait till the last 10 seconds, would have got a good entry, or if you're a core liquidity markets person, shoot for above this for entry. Bollinger Bands, again, I would say don't use them as your entry judge because they move and it makes it difficult to judge. But static levels by setting entry is perfectly fine. Any questions on that one before I jump to the next? I keep forgetting to ask. We'll do 3 more charts and then we'll take a look at 2.7. Next one. Okay, this one is zoomed in a bit more, but let's start. Range or trend? Range. Good. Is it a good or... The range is sticking to the top of the center of gravity. So we would know overall, just guessing, we have a upwards trend on the long term. So the trend, if I had to guess, long term would look something like that. It's not a heavy trend up, but it's like that. So the first thing I would say, we have a range. Here's our candle. I'm going to draw, here, let me exit, and I'm going to draw the candle just to the right of it, what the candle touched. So if we draw straight out and draw straight out, this is what the candle was going through at the time. We had price go up and down. This one for me is an ugly ass trade. Again, value charts isn't there. The candle is in the center of gravity. So if you're new to trading Axis, right away, not a core qualified, pass. He took the trade. Yeah, the candle itself, if we look at it, the top of the candle formed here and the bottom of the candle formed here. It's just an ugly setup. So institutional wise, the daily pivot would have came into play, the round number. These two I would have ignored. So let me draw what we have on the chart. First of all, this isn't core qualified. No one should have, unless you really have been doing this a while, you shouldn't have taken it. We have two institutional levels that came into play. So that's that. Right here, no. Stochastics is kind of showing overbought, oversold. I have the feeling whoever this is taking stochastics into consideration when doing this. So we have one current market condition matching up. We have two institutionals. The rest of our market conditions, we have, I'm going to put X's down here. That's current market condition not matching. Here's Bollinger Bands. Current market condition not matching. Or value charts not matching. So for me, this is a pass. I mean, right away for the newer guys, it's not core qualified. You're just passing right from the get-go. You shouldn't even have touched this. Even if you did take this trade, or even if you decided to take this trade, yes, there's a support and resist zone right here and a round number here. But your current market conditions aren't adding up on this. So your institutional and your current, no. I would just have passed. Stick to core qualified. That would have kept you out of this trade completely. You would have never even had to go on there because it wasn't core qualified. If we look on value charts, what we were getting, tiny candles. I'm going to show you this here in a second, but this, for the Asia setup, this is why we're going to be using a different value charts. Look at these candles, how small they are. And we have not that big of a range. So we went overbought here. This is our overbought. And look, price barely moved down, and we went oversold on this candle here. Actually, this candle. So this was our oversold candle right here, this one that I just turned blue. Look at the minimal amount of movement we had from here to here. So value charts, when you see tiny candles like this, becomes very unpredictable. So we want to just ignore it. The newer version of TA, I'll show you why. Plus, we have these tiny ass candles. No, this was bad. Not core qualified. Should have skipped it. Shouldn't have touched it. And dog shit trade. Let's look at AUD USD. For whoever's these are, don't feel bad because you did right. There was a lot of dumbass trades in here, which I'm gonna agree with you. Don't let it get you down though. The dumbass trades you'll learn from. That's why I'm not exactly super nice when I see a dumbass trade. You need to learn from them, and you'll do well. Just don't get discouraged, and don't start fucking revenge trading and going stupid. That'll be the worst thing you can do. Just learn. It's nice that you're showing bad trades. That actually says more than the people that just send me and I'm not talking about you, Jorma. I get some people who I ask what their ITM percentage is, and they tell me they're like 61%, but I say send me your trades, and I get nothing but wins. Jorma sent me a shit ton of trades where he has had a lot of losses. He had 2 good days in a row. But he's sending me losses also. Don't be afraid to send losses. The losses are going to help you more. Me saying that was a dog shit trade, you're probably going to remember that more than me saying, well, wow, that was a really pretty trade. You did good. Let me pat you on the back and rub your belly. Send me your bad trades so I can review them. You can go back and watch this video over and over again and hear dog shit trade as much as you want, but maybe it'll sink it in. So next time you know what you're doing wrong, and it'll help your ITM percentage over the long run. Let's take a look at this one. Let's start off again. Range or trend? Okay, we have a range. Is it ranging in and out of the cog, or is it riding the middle now? So let's take it a step further. For me, we have a small range. We have up, down, up, down, up, down. Since we're using the center of gravity, though, to be our judge of how well this is ranging, it's kind of a crap range because it is just kind of riding the middle. We get a downwards here and an upward. Slight upwards trend on this one, if I had to guess. On the long term, short term, we are ranging. Reasons for entering on this trade. He entered on this candle here. Let's zoom in a bit. Does that help a little? So this was our entry candle, which I'm just going to say I don't understand. Let's focus. Do we see any institutional levels? Do we see any institutional levels for this? Let me draw the candlestick, the complete length of it, to help a little. Okay, so this was the entry one. If we go out here, and this is the top of it. So this is about what you should have been seeing. Do we see anything institutional that it banged into? So we see 0 institutional levels for one. We have core qualified at least. Actually, no, we don't. This is going to get some people and some people not. This candle was core qualified. This one wasn't because value charts actually went into... Okay, yeah, he would. Okay, so this one... Candle moved up. What did we have next is a divergence on VC. Does everyone know what a value chart's divergence is? It's showing weakening of an upward moving trend. Here's this candle. And I guess it's good because now we can see a little divergence. Son of a bitch, man. Ignore all the other blue marks but this one. Value charts went above 8 on this candle here. The next candle went higher. Value charts went lower. So that's a divergence. We now have a divergence on value charts. This is his entry candle, so I'm going to ignore this one and the fact that I'm just going to ignore it. I just wanted to point out the divergence so that people understand what it is. So a divergence typically will mean a weakening. Entry-wise, you had no institutional levels. Current FIBOs, what do we have? It hit 161.8, and this is the PRP. So we had not core qualified anymore, but divergence. Let's just go straight by TA rules. We weren't core qualified pass, right there. If anything, you would have taken that candle, and by entry, if you would have waited to the last 30 seconds, 10 seconds, you would have lost. We had monthly, weekly, daily highs being pushed up the entire time, so you would not have had those as a viable way to enter. Right here we had daily FIBO and a Murray math line. If we look back, Okay, just using common sense on this one, you should have been able to stay out of the trade. Let me explain my reasoning behind that. Here's the candle. Now, when this candle formed, the monthly, weekly, daily high would have been down here, so I could see why you might get excited off that. This candle pushed everything up to here. So you had core qualified. So what's the next thing you're waiting for? Would have been reasons to get into the trade. What would your reasons have been? You would have had a Murray math line, so one institutional, a daily 5-0, which for me would not have counted. It's at the bottom of the damn candle. We want something up here that it's running into. So we had one institutional. We're core qualified. Value charts is there. So let's mark it down again. This side will be, we have one institutional reason. 0 to 100. Let's take a look. I'm sorry. This is 0 to 100. Is market expanding or is it contracting? Market, remember we're comparing it to here. So we have an expanding market. So that means we're ignoring these levels here and we're looking for these levels here. I'll just say it right here. This candle was stupid to enter on. You should have been focusing in on this one. And I'm going to try and point out kind of how either this would have been an ITM or an OTM. If you were following rules, you would have never been in on any of this shit. There would have been no trades here. If you were waiting to, say, the last 30 seconds, 10 seconds, the candle wick is too big. We're not getting into the top quarter of this candle, nor are we getting into the top eighth of this candle. Nothing's being done right here. So this would have been a pass, this would have been a non-qualified, and this would have been nothing. Still not qualified. So let's focus back. You should have passed, but this candle here, because a lot of people might have gotten into it on this one. If you followed rules, waited the last 10, 30 seconds, it's a pass. If you were shooting for entry then, what would you be looking at if you were going to do a non-time based entry but a level entry? In other words, you're looking for something to enter on. Remember, weekly, monthly is not actually, those are just there for your information. They're probably one of your weakest levels as they just get pushed. They're not a static level. They're just they're like the Bollinger Bands. Think of them as a long-term Bollinger Band. Paul got it. So if we were going to ignore the rules and try and enter, there is WR1 is our only, Jesus Christ. This is about our only entry point we could have. We could base it a little bit off of getting in on the hourly 5-0, but remember, we want a static level if we're going to ignore the time rules to get in. So WR1, is the monthly, weekly, daily high a static level? And I just said it, so no, it's not. It's just like a Bollinger Band. It gets pushed when price hits it. Does the weekly move? Does the Murray math line move? Does the daily 5-0 move when price hits it? No, it sits there. Our weekly, monthly, dailies get pushed if price hits it. Our Bollinger Bands get pushed if price hits it. Our center of gravity gets pushed if price hits it. So none of these are static levels. The institutional are your backbone. They can be used for entry. They can be used to judge if levels are being pushed through. You can't see if levels are being pushed through because if you glance at the chart for anything on this side of the chart, this is all just freaking, it can all be pushed by price. Everything over here is your static zone, your confluent zone. It's all static. It can't be pushed around, so it'll help you understand how the market's responding to levels. Does that make sense? Cool. Okay, so basically this trade, you can turn that on if you want. The previous monthly, weekly high-low is available in the indicator. You can go in and turn it on if you want. I tend to agree there. I do like it, because it is then a static level. You can add it on, but to keep charts clean, I didn't. I honestly, 2.7, I took the daily high out. This was one of the reasons, because I saw so many people seeing daily high and jumping in on the trade. I saw more, over the last 2 months, I've seen more losses because of daily high being used as a level, so I just completely removed it. We have weekly high and monthly high now, and you use your swing high, swing lows. If you want to use previous daily high, like you see here, that's acceptable. But daily high is gone in the newer version. Okay, so basically on this one, for whoever's charts these were, this was a dumbass trade. I'll show you once I get into the other setup, okay? So this was a dumbass one. The candle you should have been concerned with was this candle. You should not have touched anything on this candle nor this candle. If you would have followed entry rules, we would have had no entry here anyway. This just would have been a thing was there. This whole thing would have been gone. You wouldn't have had an entry. And even if you did decide to stick to a level for entry, price never got close enough to... no, it didn't. It was at least a pip and a half away. So price never got there. So on this one, I would say, blah. You did no goody good. Bad. Alright, let's close this crap up. Let's start up. Run it as... man. We're going to take a look at 2.7 real quick and 2.7a. Remember, you're going to get two templates. I'll show you what we're waiting on. 2.7 is going to be for London, US session. 2.7a, and that'll be the template name, is going to be for Asia. Or anytime we have a very restricted market. But if you're trading US and you have a 5 to 10 pip range, you probably don't want to be trading US. You're going to get burnt because something's going to explode. Because every time you have price hitting an outer limit of the range, it's just a chance for a giant run. Okay, so start. Give me a second to get it up, to get the charts up. I have the MT4 to bins running, so it might cause an issue, but we'll see. It's one of the bugs we still have with it. You know, I'm using VirtualBox, so it's a little bit slower. After I got infected by that virus, like I've told everyone, I have not gone back to running it on my local machine. Let's see. Yeah, it's going to take a second. One of the bugs we have with the MT4 to binary, see how I have no connection down here? Even once it connects, it's delaying connection. I had a guy, do you remember when BOE and BOD went down? When David got infected and the guy stole, that guy got me too, because he was asking for Bitcoin and David asked me to help him out a little bit and talk to the guy. Well, I pissed the guy off and he went after me too. So he ended up draining my PayPal and 2 credit cards. Let me see if this fixes it. No connection still. Okay, so let me load up a template. Let's go to cable. Let's load up. I haven't named these right yet. And template. Okay, so 2 templates we're going to have. I don't have the center of gravity on these. If you want, I can throw it on here, but I'm really not interested. We all know what the center of gravity is. The biggest changes we're having are right down here. Trending, caution, put stronger. So that means we're looking for puts. We're not looking for calls. Basically, this is your short-term trend. This is your overall trend. The issue we're having is this one here. This works. The put stronger works, but this little whatever you want to call it, the little yin-yang symbol, is tied into this one where it's going to feed you some trades. But just by this, put stronger, even here, unless we have really good confluence, we'd know that we could really want to check into these trades. Like, for instance, we had a signal on this candle. No confluence. I'm looking to the right as I check these. All we had was a daily open. We had a small round number, daily open. I don't have value charts, so this one isn't a good example. We'll come to it. Okay, 2.7a. Let's start off there. Value charts looks a little bit different, as you can see. This is the biggest difference we have, other than the call stronger and current blend. We're looking for calls on this one, so that means all these trades here we would want to look at and look for confluence with. This is your biggest difference, is we're using whatever you want to call it, adaptive dynamic value charts. Let's see if we can, just for the hell of it, add in another value charts below it so you can see a little bit of the difference. Jesus Christ. This will work. Let's see. 8, 7. Or let's do 6, sorry. -6. Tell me I didn't put a shit ton of... I put 500 candles to check, so it's going to take a second. This VM machine can't handle that many. Okay, but the adaptive, whatever, dynamic value charts, as you can see, is a little bit different than the normal value charts. So let's take a look. Let's see if we can get... Okay, so that's normal value charts versus the adaptive. The top one works much better on a tighter range. The bottom one works better for me. This is traditional value charts. This one works better on a normal range. If we look here, this one would have gone full-blown 8, where this one wouldn't have triggered. It was only the middle ground. If we look here, these kind of match up. But you see how value charts is a little bit overbought, and then it goes overbought, and then nah. The adaptive plugs down right through it. You get your alert when it breaks this line or this line. Right now, as we can see, the normal value charts is completely overbought, whereas the adaptive still hasn't hit up here. I'll have, as soon as what I'm waiting on is this here, the call stronger Indy and the put stronger Indy. I'm waiting for that to get fixed. It is when it alerts, it'll pop off more than a few times, and it will not draw this until late, and then it doesn't give the alert till like 3 candles later. I don't know. I'm waiting for my coder to come back because this guy just made a total fucking mess of it. He just pissed me off, basically. That's just a quick summary of what we're waiting on. This is functioning. The call stronger. Like if we jump, so we're on USDJPY. Let's take a look at this as a trade since we just got an alert on it. So we're range bound according to this, but not really. See how this one is just there to help you judge. We have call stronger, so we're looking for calls. Here's our 0 to 100. We have an expanding market. So we are in the middle of the Bollinger Bands. Here's our Bollinger Band. Here's our Bollinger Band. We're hitting a weekly resist 1. We've got 32 seconds left in the candle. Well, would anyone take that? And the COG isn't on there, just what we see. We're overbought, oversold. We have one institutional, expanding market. Anyone take that? No trade. Excellent. Whether it reverses or not, we do have a good support and resist level here. So don't forget. I don't know if there's new. But you see how if we were watching this, this would be impossible to get entry on. If I was waiting to the last 10 seconds there, price went from here to down and then back up. No entry on it. That's what I'm saying. Even waiting to the last 10 seconds, guys, sometimes you're going to miss a trade. Don't get pissed off and just wait. Yeah, it freaking jumped all over the place. That's an exact reason why, fuck it, just pass on the trade. If you're getting movements like that, pass. Don't stress yourself out. Just pass. Bottom of the hour also, but... Alistair answered right. It was a no trade. Why was it a no trade? We're in the middle of the Bollinger Bands. Just because value chart spiked, like I said, not a reason to enter. It did then touch the bottom of the value charts and up. I'm guessing we might have a little bit of news right here because it moved fast. The glasses that you see are the tab indicator, but I removed them from arrows. They're no longer arrows because, again, I had people trading the damn arrows. I changed them into glasses because if you get them, all it means is look at the damn chart. Do you have a trade available or not? The yin-yang signs are going to stay there because I find it does help. If you look at the yin-yang signs overall, they're going to help you pick up a few extra trades when you have confluence. This is, and don't go crazy seeing this. This just happens to be that every one of them seems to have worked. But down, up, good, good, good. They go through good and bad phases. Don't get crazy and think, oh my god, it's a holy grail. It's the same goddamn thing as tab, where sometimes they work, sometimes they fail. It's just, people were saying they wanted a few more trades out of TA. So I had another way for people to identify, hey, there's a trade that doesn't use the cog. These will give you, you can ignore the cog on these, but you want to look for Bollinger Bands. That's basically the summary of them. I am going to go in depth with them as soon as the indicator freaking works. But it's going to allow you to pick up a few more trades. Because I had people... I'm trying to get to the goal where you can have 5 to 10 trades in about a 2 to 3 hour period without having to take stupid shit. I've been able to do 10 to 13 trades over about 2 to 3 hours for the last 2 weeks since I've been using it. But I've been having to do these manually because these alerts are... The yin-yang draws right, but the alert comes 3... Watch, you see how we didn't get an alert on this? The alert will come on the next candle for this one. And I hate coding, or else I'd do it myself. But when my coder will be back next week, and I'll get them fixed then. Any questions or anything? You understand how we're going to have an adaptive value charts now for Asia? You'll get 2 templates. I just wanted to show you what's going on, guys, so you know it. I know 2.7 has been a while. You get 2 templates, 2.7, 2.7a. I know it's been a while, but I really wanted this in here. The puts. This is basically to help you out with the current market conditions. That's where I see a lot of people failing, is put stronger. If we look, so these are calls, and see, you can see even this, we got a double signal on this on the news. So don't trade the indicators, trade the chart. That's all I can say. This isn't a huge step forward in anything, except for I wanted to get things on here so people can see market conditions. A lot of people, it should help a lot of people, hopefully. Any questions or anything else, guys? Otherwise, I am done for the day. It is time for screw-off time for me. Since the European banks were closed, I'm not even screwing with U.S. markets today. It's Friday anyway. But I wanted to get the webinar in. I know this was a longer one, but we've been lacking because I've been working on 2.7. The volume question. Okay, so volume, you can either do it one of 2 ways. You can just go here and put volumes on, Control L. There they are. Is that what you're talking about? You also have... you're looking for volume to drop off. Personally, for me, I just go to Tools, History Center. I like to see the numbers myself. For me, this makes a little bit more sense. I have a chart open with 500 bars on it somewhere. That's what's causing me to drag ass. I like to see the numbers myself on volume. So on 5-minute chart, anything once it hits 100 or below, I'm worried. For me, I will just glimpse at this. I go in and see volume. That makes more sense to me than these little pissant sticks down here. If you see volume all over the place, like random numbers, and I mean, if it's a between 100 and 300 pip change, that's fine. But here, you can see when news hit, we had 204, 326, 719. That's an odd. If you see volume all over the place, for me, not really tradable. There's some other volume indicators. I'll have to look up and find them. But basically, volume, you want it to be... It's just like the market. If you're... I don't know, if you were... I'll just say it. If you were surfing, and the volume's kind of... You could kind of refer to volume as chop, too. Because if volume's up, down, up, down, up, down to extremes, it means the market's going to be very difficult to trade. During the summer, you're going to see it. Volume is going to get very... It's going to go from one extreme to another per candle. That's why trading a 5-minute chart is going to be very difficult. Any other questions? Cool. I'm going to